institutions who have been sidelined for the past few years are planning to participate in a more meaningful way.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video breakdown, we're going to be diving down the rabbit hole, proving to you all previous points that I've made that financial institutions need to be able to generate yield on their digital assets. And they are, for a fact, going to be participating in yield generation strategies. You all just heard directly from the managing director of the DTCC that
we're able to operate in a global financial ecosystem efficiently. And I don't think that's far away. I actually think it's much closer than many people realize. And I'm expecting next year to have that be the centerpiece of the tone of this conference is, look, we're finally there.
And they're directly telling you all this stuff on stage to your face. And so in today's video breakdown, we're going to continue to dive down the rabbit hole and show you guys why now is such an imperative moment in history for you all to further your education on learning how to start to generate yield and passive rewards with your digital assets, showing you guys undeniable proof that these financial institutions are, for a fact, not only doing so in the now, but are interested in doing so in the near future. So before we get into today's video clips, actually, as a matter of fact, I will start off with another video clip. So we have the gentleman from the DTCC mentioning that we are there, right? And then we have this gentleman from a panel discussion that just took place a couple of days ago in collaboration with Ripple and Bitstamp. This is Albert Chow. He is some high-end representative out of Galaxy. And just listen to what he says about how institutions that used to sit on the sidelines are now starting to participate in this ecosystem in a big way and will continue to do so moving forward.
As you think about their businesses more broadly, they're very large, complex organizations that are very intertwined into the regulatory environment. And so, you know, this is one environment and a unique environment where we have a new administration that's supportive. We're going to hopefully in the next couple of months or into 2026, get a little bit more regulatory clarity. And then until that happens, we'll start to see a wave of, you know, large financial institutions start to participate in a more meaningful way. And so I think it's going to happen. I think it's just going to take time. And I think a lot of those institutions who have been sidelined for the past few years are planning to participate in a more meaningful way.
Now, in the same panel discussion, they also spoke about institutional DeFi. And the gentleman from Bitstamp specifically mentioned that DeFi, from an institutional perspective, is important, and the interest in DeFi is picking up. And this is going to go hand in hand with what the gentleman from the DTCC is going to say to you guys in just 1 second.
Really, Stripe's acquisition of Bridge in late last year sort of catalyzed a lot of what we're seeing in the stablecoin space. And so, you know, I think there's naturally people thinking about getting in crypto more meaningfully. And the, you know, and like I said, and like Bobby, you mentioned, this speed of market matters in this space. And so, you know, people are using M&A in the right context to do it, to get into the space and offer these types of products to their customers. You know, I think with me around, you know, what we're seeing with specific deals, you know, and I think a lot of it right now is also trickling into the realm of DeFi, right? We're seeing institutional DeFi start to pick up. And that's a little bit more of a unique approach in a way that, you know, that's where on one end, you have really innovative people building on top of DeFi rails. You have a really unique sort of customer base, but on the other end, you have folks who sort of bring in that compliance and regulatory framework into sort of DeFi, where they need to sort of meet in the middle. And so, you know, I think that's going to be an interesting intersection. You know, and sort of that's just going to take a bit of time, you know, to a point where we can get institutional DeFi to where it needs to be.
Yeah, no, makes sense. And I think we should come back to the DeFi topic. That's no doubt important and growing in importance, right? So
no doubt Institutional DeFi is important and it's growing. Now that goes hand in hand. Before I play the video clip from the gentleman from the DTCC to kind of wrap this all up and showing you guys that now is such an important time for you to start to learn how to generate yield with your digital assets. We've been showing you guys physical proof that financial institutions are already doing this, and they're doing it at scale. I said to you guys here in this post, institutions are now using DeFi infrastructure to earn yield. Signum Bank has integrated with Binance to let hedge funds and prime brokers trade off exchange while pledging T-bills, USD stablecoins as collateral. The collateral, it earns real yield while margin is used for trading. This is what institutional DeFi looks like. On-chain collateral, off-exchange custody, yield-generating stablecoin assets, and bank-grade compliance. The walls are down, institutions are coming in, and DeFi rails are quietly going mainstream. What did the gentleman say on the panel discussion? That they're realizing DeFi rails are better, right? And here we can see this in real time. Signum just announced this. This is from the 7th of May, 2025. Signum Bank sees surging demand for Binance off-exchange custody. In this report, it goes on to say, Signum Protect is a convenient and fast setup for onboard Signum clients because no tech integration is required, with traders benefiting from flexible and broad range of stablecoin, liquid, and yield-generating collateral like T-bills, USD stablecoins. Most recently, Signum and Binance also started testing the use of Bitcoin as collateral for selected clients. Down here at the bottom, it mentions, the combination of Signum's banking license and Binance liquidity creates a unique solution that aligns with current market dynamics and institutional crypto trading, where demand for off-exchange solutions with regulated custodians is growing rapidly. In addition to lower security and counterparty risk, institutional traders receive the double benefit of the yield generated by collateral like T-bills being higher than overall cost of the service, says Dominic L., Signum's chief product officer, right? So more evidence, and we've shown you guys in previous video breakdowns that financial institutions are earning yield on DeFi rails right now, in the moment, at scale. This is huge confirmation and just goes to show that there is some form of regulatory clarity for these financial institutions to start to participate in yield generation strategies, which is why you should get your education right. Whether that's tapping into a mentorship like the one that we offer here in the Wealth 28 Club. You guys, if you want to tap into that, can head over to CYPRXtrading.com and you can see in real time how we are earning yield on our digital assets, or just taking initiative and starting to read these documents and listen to these panel discussions to enlighten yourself on what is happening. Now back over to the DTCC representative, because none of this would matter without confirmation from large market participants like the DTCC. And specifically at Consensus CoinDesk just posted 5 days ago, the gentleman from the DTCC literally says that institutions are going to need to be able to generate yield.
Accelerate the engagement and hopefully the scaling of the adoption of this. I know we only got a couple minutes left, so maybe just parting thoughts. Would love sort of each of you to, if there was one thing where you could snap your fingers, open your eyes, and it's done to really drive adoption and scaling of this globally, what would you say that is?
All right, I'll go first.
Whoever wants to jump in first.
So I think one of the things that's been missing in the blockchain world is high quality assets on chain, things with an investment thesis. You saw the importance of stable coins on blockchain rails, which provided a unit of account. But if you want real volume and real heavy duty market makers, they have to be able to place their money in things that have an investment thesis, things that produce meaningful yield without necessarily disproportionate risk. That's coming. That's coming very fast. And I think it's going to radically change the kind of value that can be parked on blockchain rails.
Institutions being able to provide yield, and he specifically said it's coming. That is not coming from some individual influencer on Twitter or YouTube. That is coming directly from the managing director and CTO of the DTCC. It would behoove you all to listen and pay attention and understand that we're not here just floating the boat and trying to get you guys to earn yield on your digital assets for our benefit. No, it is for the benefit of the all. Everybody in the near future will be earning yield to some degree on a certain portion of their digital assets, and it would just behoove the average everyday individual to start to learn this stuff now. Furthering your education, you do not have to go out and risk your crypto right now into the DeFi ecosystem to learn. to take a mentorship, to read a document, to watch these panel discussions and enlighten yourself on what is happening. This is a massive transformation and huge confirmation from this gentleman here, which is just great. Shows everything that we've been saying here at CYPRX is just materializing at a very rapid pace. Now, because he mentioned that it's coming, right, and that this is only going to, progress over time, I want to take you back to this gentleman, this representative, Pat Dillon from Ripple. I don't know what role he plays at Ripple, but he's a Ripple executive, and he goes on to confirm that all of this is coming. I will end it here. Take a second and listen to what Pat says.
Maybe I'll kick off, Albert. Let me know if I'm crazy, but I think out of our industry will emerge some trillion-dollar companies. We made it through the first evolution, or at least I did, of the internet, kind of versions 1 and 2, and you see those players. And I think certainly it was the folks that could build inorganically, saw the organic opportunities, and took advantage, the first mover advantages you've talked about, the products we've talked about, the ability to solve problems. But I do think that is good for the industry. I think the players that will continue to compete and provide the offerings, find the right partners, like there's going to be someone that's going to win, and there won't be, hopefully there'll be more than we've seen in the first few, kind of iterations. But I think it's coming. Maybe the timing is, I think it'll be a little bit faster, as you've talked about, Bobby, but it's coming. It's coming.
So you have multiple representatives, not only from Ripple, but also from the DTCC, mentioning that it is coming, right? So buckle up, lock in, pay attention to detail, make sure that you're doing the proper research and tapping into the right communities, the communities that are not filling your head with this bullish moonboy, hopium, price prediction bullcrap that just stimulates your dopamine and instead provides you real intrinsic research to show you guys institutional perspectives that are taking place in the market right now. As always, many blessings to you guys. If anybody's interested in learning how we are earning yield, passive rewards on our digital assets, head over to CYPRXtrading.com. We would love to have you in the Wealth 28 Club. You guys have now heard from the DTCC confirmation. It's not just me making it up, telling you guys that institutions are going to be earning yield. You heard that directly from a DTCC representative. So take action, right? If not, then make sure that you guys smash that thumbs up button and subscribe to the platform. Continue to watch the free content. Follow me over on X for all of these updates and these highlights in terms of documented and panel discussion research. With that being said, I'll see you guys in the next video breakdown.